Hello, everyone. Welcome to week 16 of Coping with COVID. I hope everyone is doing okay. Today is Monday, July 13th, and it is the last session we'll be having for July. We'll resume these weekly Monday sessions starting August 3rd, but I am going to be in a cottage near a lake the next 2 weeks. So I will be thinking about you and thinking about money and coping with COVID and all of those other things, but not hosting conversations about that since I will be in a cottage by a lake. So thanks for your flexibility on that. As you know, I'm Elaine. It's lovely to see all of you. I run a company called Minerva Financial Arts that helps creative individuals and organizations with the business side of their creativity. And lately, that has meant a whole lot of PPP and EIDL and unemployment and navigating these other challenges we've been facing. I am happy to report that most of the organizations I generally work with are doing okay. It's a challenging time for individual creatives and for creative organizations, but as we have come to expect in the arts, creative people and people with really great intentions tend to rise to challenges and respond in really positive ways. So I've been loving seeing that among many of my clients and individuals. As always, this is an educational conversation and not intended to be tax, legal, or accounting advice. So today, our tentative plan is to review sort of mentally a little bit what we talked about last week, which was the completion of the PPP forgiveness application. So if you have any questions that have come up as you've been thinking about last week's conversation, by all means, put them in the chat. I will keep an eye on the chat and address those questions as we go through. And then also a handful of you have submitted questions via email this week. So we'll go ahead and answer those as we go through. And then there are a couple things I just wanted to kind of reemphasize and a couple of tips I'd love for you to keep in mind over the next couple of weeks or so. So last week, we completed the PPP forgiveness application, that easy version, which if you are a sole proprietor with no employees, you can totally complete. And it's quite a bit simpler than the full application that was released several weeks ago. The video for that conversation is on YouTube, and I have made this one publicly available just because I thought it would be really helpful for a lot of individuals. So by all means, follow the link, watch it if you haven't already. Also, last week, I happened to be on a CPA webinar where they were talking about PPP and forgiveness and all of that, as you can imagine, because it's a big topic right now. And there were a couple of things that came up as part of that webinar that I wanted to just re-emphasize as part of this group. One point that kept coming up was this idea of documentation, the idea of listing out the expenses that you are putting your PPP funds toward, and the fact that you are retaining documentation for those expenses, whether that is a canceled rent check or a home office calculation from last year's tax form, or utility bills if you're paying a portion of them from PPP or even all of them from PPP, depending on your setup. And then also your own owner's compensation, tracking sort of how you got the numbers you got and, you know, following through that process. Anytime you can just gather that documentation and hang on to it, that will make compliance easier if the financial institution or the SBA or anyone else asks questions about what you spent the money on. So really try to put on your most organized hat and definitely really try to keep that documentation in order. Another thing that came up on the webinar, and we did talk about this in last week's video when we talked about sort of the certification for why you needed this money. The webinar I was on last week called it a statement of intent, which I'm not sure which one sounds more formal, the certification or the statement of intent. but it all boils down to this idea of being able to explain why you needed the money if someone were to ask. And we talked about different ways of doing that. Maybe you compare income you had during this period in 2019 with what you had in 2020 to show the discrepancy or the disparity. Maybe you keep records that show canceled shows, canceled projects, canceled gigs, canceled travel, adjustment of any sort of things, right? Anything you have like that helps tell the story of why you felt you needed PPP funding is something you want to kind of keep handy. Now, some CPAs are advising individuals to actually write out that statement of intent. If you want to do that, go nuts and keep it in your documentation. That is perfectly fine. I don't think you have to do that, but if you've got everything and you feel like you can tell your coherent story based on the documentation, you'll be in really good shape. The other thing that came up was this idea that you watch for the double counting of expenses. And this will become pretty important if you receive PPP funds and also maybe an EIDL loan or maybe other types of income where you have to account for expenses. So maybe you have a grant that was going to cover your studio rent for a couple of months or something like that. You want to make sure that you aren't kind of double counting your studio rent expense for PPP funds and also for a random grant you might have received, right? So be diligent about kind of tracking the expenses that you're using PPP funds to pay for, which you are, and then also be mindful that it's important that you're clear that you're using PPP funds to fund those expenses and not another source of income. I have heard of only one financial institution that has started receiving these PPP forgiveness applications. If you have a financial institution that has let you know they are ready, maybe drop it in the comments just so we can kind of keep an eye on that. I expect that within the next couple of weeks, more and more financial institutions are going to be ready and they're going to start receiving those applications. Many groups are waiting for all of the regulations that have been published to become final regulations. We don't anticipate any additional changes to the regulations as they become final, but many of the financial institutions are waiting until they become final just in case. So as that happens, I expect we'll see a whole lot of financial institutions start emailing you and saying, hey, we're ready. You can ask for forgiveness now or whenever you have fully expended your PPP funds. The other thing about that, there is a small chance that some financial institutions will take the application and then build it into some sort of portal on their own website. So you could imagine opening up a private page on their website and then essentially entering the information that you would otherwise put on the application and then submitting it for their consideration. If that does happen, the portals will look exactly like the forgiveness application because that's what the banks are relying on. So don't let that panic or throw you off at all. It's going to be just fine, but also just kind of keep an eye on that. Let's see, what else? I think those are the updates I had on the PPP forgiveness application process. So in general, I hope you feel like you're in pretty good shape to go ahead and complete your application and send it to the bank whenever they start accepting them. And then we'll just kind of stay tuned for everything else and see how it goes. All right, a couple of questions that came in. Let's start with this one. This person lives in Indiana, and they received a check for work that they are going to do over a 12-week period. And so their question was, how should I report this amount? And then they put together a couple of scenarios about, how would you do this? Indiana is one of those states that asks you to report income when you've earned it rather than the cash, right? So the absolute sort of by the book way of reporting this would be to take that check, I think it was $2,500, and divide it over 12 weeks and then report $208 of income in each week. I will say though, if this is you and you have already reported all $2,500 in the week you received the money, After that, you've already reported it all. So you would just report zero income in the future weeks, unless you get different income, right? So kind of like that idea about double counting of expenses, we want to make sure we're not double counting your income either. It is possible, depending on the level of benefits this person is receiving in Indiana, that $208 of income each week might eliminate them from being eligible to claim unemployment for those weeks. But that's okay. They should go ahead and still file every week and then report the income as appropriate. And then, depending on the extensions available, then they might still be eligible to receive unemployment after that 12-week period ends. The other thing too, I want to kind of remind you of, in most states, the way this is working is as long as you are eligible for $1 of either unemployment or pandemic unemployment assistance, that means it's okay. You get at least your $1 of that benefit plus that extra $600 amount, right? And we know that that $600 amount is scheduled to end on July 31st. Congress has chatted a little bit about extending and what that might look like. I don't know that that is going to happen or that it is realistic. So at this point, if I were advising you, I would say probably don't count on that extra $600 continuing. And if it does, that's just a really nice bonus. But even though that extra $600 piece is going away at the end of July, unemployment, either through pandemic unemployment assistance, the expanded program that serves individual freelancers, or regular old unemployment, those benefits can continue through the end of the year. So if you are someone who would not normally be eligible for unemployment, but you are now because of pandemic unemployment assistance, you have 39 weeks of that, right? So that can carry you through the end of the year, certainly. And if you're someone who's claiming regular unemployment, normally that would end after 26 weeks. And in your state, after your 26 weeks, you might have to reapply, which is kind of annoying. But as part of the CARES Act, there is that extra 13 weeks of unemployment. So you can also get your full 39 weeks, but you may have to reapply at some point in the middle. I know it's really confusing, and you would think at this point it would be slightly less confusing, but these programs are still wonky and weird. One extra point I want to make sure to share about that extra $600. The CARES Act is written that that extra $600 is funded by the federal government, and the federal government has agreed to fund that through July 31st. But as we talked about many, many weeks ago, all of the benefits that were part of the CARES Act still must be implemented by the states. So some states have said that for their purposes, they are going to stop those $600 payments around July 24th or July 26th. They're doing that to kind of coincide with the way their weekly cycle works, because they don't want to be in a situation where they're kind of prorating that $600 for a week because the federal piece is only covering it through July 31st. So pay attention to your state. Don't be caught off guard if you realize that July 24th or July 26th or July 27th or some seemingly arbitrary date ends up being the last day that you are eligible for that $600. Your state may have decided to only offer it for a full week of unemployment, even though the federal government technically will pay for it through July 31st. So don't be surprised if it ends a little bit sooner than you thought. This person has also a question about self-employment in Indiana. This person filed way back in April, and this is asking for them to apply again. This is one of those 26 weeks of regular unemployment, then you have to reapply for those extra 13 weeks, which is super annoying. But it's sort of a hoop you have to go through. But then as part of it, the application also asked this person if they worked out of state. So they're self-employed and most of their work is in Indiana, but they travel to a lot of different places. They might speak or give presentations or workshops or teach or do festivals, right? There's some work that happens in other states. What's key about this in figuring out how to answer the question correctly is to think about where you pay taxes on all of that money you have earned in other states, right? And so this person did note in their question that they only file taxes in Indiana and they report all of their income in Indiana and pay federal and state taxes on that, right? So the answer to this question is no, you don't work out of state, right? You might go out of state, but all of your work is based in Indiana. That is where your tax home is. Now, it is possible that someone might have a slightly different fact pattern. Let's say you're a musician and you happen to tour all over the country, and as part of all of your touring engagements, right, when they happened, you may have been required to report income in lots of different states, right? We see this a lot for musicians or actors or producers or directors who may have been treated as employees in different locations, right? So if that's your scenario and you reported income in different states, then for purposes of this question, you would say, yes, you earned income in other states. But if you are sort of managing everything and you know that you have reported all of your income in your state, then you're totally fine. You did not work out of state. Everything was based in your state. And at the risk of complicating things further, for individuals that do travel a lot, especially if they go to a state on a regular or repeated basis, it's worthwhile sort of understanding what those state laws say about when you have to start reporting income in that state. So for example, I happen to know that New York State requires you to report income earned in New York if you've been there for 183 days or more during the year, right? So you better believe that individuals who travel to New York a lot are very keenly aware of that number so that they can make sure they are complying with the law once they hit that threshold, right? So every state is different, and some states are starting to explore different ways of what it means to kind of make money in a state, especially now that so much is happening digitally and it's harder to track sort of physical presence in a state. So I fully predict this is an area over the next 5 years or so where we'll see some interesting shifts and movements about where you might find yourselves having to pay taxes, income taxes, I mean, not sales taxes. And that's okay. And we'll let the excited tax policymakers kind of figure out the details of this. But I will say, for very specific purposes of this question, no, you only worked in Indiana because that's where you reported all of your income. But if you travel a lot, maybe start paying attention to where you might also have tax obligations. Another question came in, and this one broke my heart a little bit because I could just feel the frustration in this person's question. This person was applying for EIDL, that is the loan through the Small Business Administration that carries interest at 3.75% and has a very long repayment period. And this person was filling out the application and was rejected. And this is a little confusing, but they were rejected for the advance, but they were approved for a loan. So remember, this EIDL program is a little crazy. It is a loan, but the loan came with an advance that was treated like a grant, right? And the amount of the advance was based on the number of employees at your company. So this person was a self-employed individual. That's one employee, right, themselves. So the EIDL could have come with a $1,000 advance grant. except that there was a box on the application you had to check that said you wanted to be considered for that advance. This person did not check that box, although they think they did. The SBA says no, they didn't. So there's a little bit of confusion there. And once you've submitted your EIDL application, then it's too late to then go back and request the grant. So this person was approved for a loan, but they didn't want the loan. They only wanted the grant. But because somewhere in the process the checkbox was missed or overlooked or unchecked as part of the submission process, they ended up not being eligible for it. And the question was, can I help? And the answer is not really, unfortunately. You can go through the appeal process and try just to see, but the odds of it working out are probably not great. Here's the thing though, they did approve this person for an EIDL, so the loan part, right, for $3,500. They don't want the loan, they are not interested in the loan, they plan to decline the loan, and that's okay. But they were also frustrated because when you apply for a loan, that usually comes with an inquiry into your credit. Usually they request consent for that. So there was probably somewhere embedded in the legalese and the technical information of the application. It was probably there was probably some sort of notification that said, we will request a copy of your credit or something like that. But this person wasn't aware of it. And they were frustrated because they saw their credit score dip a little bit. Now, it only dipped 3 points. And what we know about these credit scores is that they can fluctuate pretty easily. So my advice to this person is continue to make regular payments on all of your bills, and you'll see those 3 points come back really, really quickly, and that's okay. But that's something else to sort of be aware of, right? Sometimes there are these unintended consequences of filling out the applications and then realizing that it is going to result in a check on your credit. During one of these future sessions, we could probably spend some time talking about credit scores and credit reports if that's of interest. I find that's an area where, there's some understanding, but there are also a lot of questions. And FICO, the company that sort of manages that credit score process, recently, earlier this year, made some changes into how they calculate credit scores. And the changes aren't, super huge, but they could have had an impact on your credit score a little bit here and there, especially if you were someone that was regularly using kind of new credit to pay off old credit by consolidating your debts or credit cards or something like that. Those were starting to be viewed within the formula as kind of dings. But ultimately, when it comes to your credit report and your credit score, the best thing you can do is pay your bills on time every month, especially bills that go to a vendor that reports to the credit agencies, right? So if you have a casual relationship with your landlord and you write a check every month, but it's not, a super formal type of arrangement, your landlord might not be reporting your timely payments to the credit bureaus. But if you're going through certainly a bank for a mortgage payment or a landlord that is a little bit more professional or formal, that's probably being reported. All of your credit card payments that you're making every month, loan payments, maybe on a car loan or student loans, those are all being reported to the 3 credit bureaus. And then usually utility bills are as well. So making on-time payments for all of those bills is a great way to sort of boost your credit. And then the second biggest thing you can do to boost your credit score is to pay down your debt, because the second biggest factor that contributes to your score is the amount of outstanding debt you have relative to your income and your overall assets. So as you continue to pay down your debt each month and watch that number get to be smaller instead of larger, that's another really good way to sort of nudge up that credit score. I will say though, the scores fluctuate, even though FICO calculates them consistently, you will see a couple point fluctuation here and there, seemingly for no reason. So don't worry too much if you're seeing fluctuations within about 5 points up or down. That's totally normal. If you see larger fluctuations than that and you don't know why though, that's something you would want to look into. Okay. Tax day is this week, which is super exciting because normally it's in April and then I don't get to talk about taxes again for several more months. But we are in July, and as you know, the IRS did extend tax day this year until July 15th. So July 15th, Wednesday, is when your 2019 taxes are due. So if you have not yet filed them, go ahead and do that. The time is now, right? This is a big week. We have tax day on Wednesday. We have Bastille Day on Tuesday. And it's also the week when my mother is celebrating her birthday. So we have lots of things to celebrate this week. Tax day is just one of those things. I will also share as well, you can still make an IRA contribution and report it on your taxes as one of those adjustments to income for 2019. Normally, you have to make all of those contributions by the time you file your tax return in April, but this is a special year. So if you maybe are looking back and you say, you know what, I've got some extra money, maybe you peek at your tax return and see if there's an opportunity for you to increase the contribution to your IRA from last year. If you've already hit the cap for 2019, don't worry about it, right? But if maybe you didn't make contributions for 2019 and you're in a position where you feel like you maybe could, that's maybe something to think about. So file that away. The other thing I'll remind you of is, as someone who is self-employed, there are lots of ways to use retirement savings to lower your overall tax burden. Certainly IRAs are a good way to do that. That's your individual retirement account. But also if you have self-employment income, so that's your Schedule C amount, right? That line 31 that you have gotten to know really well as part of this PPP process, you can contribute up to 25% of that amount to a SEP. SEP, a simplified employee pension. That's not a terrible idea if you are interested in upping your contributions to retirement, if you are self-employed, and if you are in a position where you've got some extra money and you might want the tax benefits that go along with saving for retirement. So file that away. Having some sort of simplified employee pension. There's also something called a simple plan or a solo 401k. All of them have slightly different nuances, but basically those are 3 options for self-employed individuals to make contributions to a retirement plan that's different from an IRA. And as long as you're under the overall deferral limits for the year, if you're self-employed, you can have both of those things, which is okay. I see a note in the chat from Kay that you missed the first part of my suggestion. I'm sorry, was it the IRA type of suggestion? I'm trying to kind of rewind in my brain. File your taxes this year for 2019. They are due on Wednesday. And if you haven't filed yet, or if maybe you weren't sure if you could make an IRA contribution for 2019, that's something you can still do through Wednesday of this week. And file away that saving for retirement is still a good thing to do if you're self-employed. And there are a couple of interesting ways to do that, but there's no time pressure on those things. You can do those things all the way through the end of the year and possibly beyond. All right, so what else should you know? A couple of general things that I wanted to make sure just to kind of spend some time on. We talked about how that extra $600 a week that's coming as part of unemployment ends this month. Technically, the federal government has funded it through July 31st, but some states are ending the program during the week that ends that coincides with their unemployment benefits towards the end of July. So think about that and be prepared for that. It is very possible that Congress may introduce another round of stimulus payments or expanded unemployment benefits or a continuation of those benefits or nothing at all. I don't have a magic crystal ball, and goodness knows predicting what politicians will do is not something that I think anyone can do with certainty. The most sort of promising legislation I've seen does include an additional stimulus payment for individuals whose adjusted gross income is less than $40,000. So that's a lower threshold than it was for the first stimulus payment that came out a couple of months ago. Those were those $1,200 payments dispersed by the IRS. So it is very possible that there will be another round of that, although the amount that individuals get and also the threshold for who can get those payments might be lower. There was another proposal floated by a group of economists that was advocating for an ongoing stimulus type of payment, almost the Andrew Yang approach, right? That would sort of feel like a universal basic income that would be distributed for the duration of the pandemic. I don't know that that's going to get any traction among our lawmakers, but it's a proposal that exists out there. It is also possible that Congress will extend unemployment benefits again. It's possible they will extend that extra $600 a week. I don't know that that is as likely as simply extending the number of weeks of unemployment or the individuals that are eligible for unemployment. And of course, it is very possible that they will do nothing and just continue to kind of watch and monitor and see how things continue to shake out. I know it is a really, really tough time right now. And I think a lot of individuals are kind of just waiting to see which way the wind might blow when it comes to the economy overall. And I know many of you are kind of at the mercy of how people are feeling and whether or not performance venues will be opening up and what other opportunities might exist. Because there is still so much uncertainty, having some cash on hand is still really good advice. So when I say cash on hand, what I mean is money in a checking account or a savings account that you can access really quickly if you need it, right? My advice is always to aim for at least enough to cover 3 months worth of expenses. And I like to think of it as 3 months worth of business expenses and also 3 months worth of personal expenses. Once you hit that threshold, then aim to cover 6 months. And if you tend to be risk averse or rely on income from the arts, man, if you could get to enough to cover 1 year worth of your expenses, you would be in a really fantastic position. I know that feels like a huge amount for some individuals. So start slow, aim for 1 month and then 2 months and then 3 months, and then just start accumulating it. That advice was reinforced over and over again on the CPA webinar last week. Not surprising, CPAs tend to give this advice a lot. And honestly, it's just kind of a defense against uncertainty and craziness and delayed unemployment payments and all sorts of things that are really outside of our control. And then the last thing I want to remind you of is keep going back to what it is you do, the value you provide. Several weeks ago, we sort of reinforced that idea and the idea of restating your value in light of what has changed and what hasn't changed about what you do and how you add value to the world. Keep going back to that because that hasn't changed. You continue to do amazing work in the world, and that continues to be such a crucial part of the human existence right now. And it will be the arts that continue to serve everyone, to bring us together, and continue to make the world a better place, even as we continue navigating through this pandemic. So don't forget about that, even when things feel totally overwhelming. So that's our session for today. We reviewed the PPP forgiveness process, high-level details, and reinforced some of those points about a statement of intent or making sure you can articulate why you needed the money, making sure that you have documentation for all of those expenses, and then going through some questions that have come in this week or so. The next 2 weeks we are off, and then we will reconvene on August 3rd when we might have new things to talk about when it comes to expanded benefits or maybe another stimulus or something else entirely. I have one question in the chat. Someone said, how can I find out more about SEP, the simple plan, and a solo 401k? Great question. I'm pretty sure IRS publication 560 is a really good starting place. That is the IRS publication that talks about these retirement plans for self-employed individuals. I also love NerdWallet and Smart Asset. Both of them give really great, sort of easy to read financial information and articles, and they have both covered them for self-employed individuals. So those would be the resources I direct you to first. And when I send out this week's summary, I can put a link to those articles and also the publication as well. I don't see any other questions coming through. Oh, yep, I lied. I do have one more question. Okay, this person says they did reapply for unemployment and they were rejected again. Oh, that's frustrating, as they were the first time. So they're self-employed, so I'm assuming this is why you were denied again. They were denied originally, but did end up getting the pandemic unemployment assistance. Yes. That feels weird to me. I'm a little surprised that they had you reapply if you were already getting PUA, but states continue to surprise us. So if you were rejected for regular unemployment again, I would probably go ahead and reapply for pandemic unemployment assistance. And then that'll probably restart the process for you. That would be my suggestion. I hope that helps. Keep me posted on what happens, because PUA was originally designed to last for 39 weeks. So you shouldn't have had that reapply thing after the 26 weeks. However, as we know, states have struggled to kind of put these things into place. So, you know, it's very possible that it's just a quirk of the Indiana unemployment system. Another question came through. This person asked, do I suggest setting up an LLC? That's a fantastic question. When we're talking about entity types, I think what we always want to look at is sort of the cost and the benefit of the different types. Sole proprietorship, where it is just you hanging out, earning money, is totally and completely fine. The drawback of being a sole proprietor is that you don't have any layer of inherent liability protection between you, the individual, and you, the business. So if you are a sole proprietor, I would definitely invest in small business liability insurance just to make sure you're covered. And then I would go through some best practices about keeping a separate bank account to the extent that you can, and also just kind of making sure you're cognizant of the liability. If you hire anyone to do work on your behalf, definitely as an employee, but maybe even as a contractor, if someone might mistake them as sort of acting as your employee or in the capacity of your employee, or if you start accumulating a high level of personal assets, and you can define high level however you want to define it. In those two situations, I would strongly suggest you have some measure of liability protection inherent in the business. Single member LLC tends to be the easiest LLC to form. It is treated just like a sole proprietorship for tax purposes. And in most states, California might be different, and I know New York is more expensive. So in some states, it does cost a little bit of money to form. In most states, you can usually form one for less than $200. California and New York might be special entities, and there might be others as well. I know New York, for example, has a notification requirement. So you have to, publicize the existence of the LLC, and that can cost $800 or $900 or so. So there might be weird quirks on a state-by-state basis, but if you kind of do the calculus and say, you know what, having that liability protection definitely makes sense for you, single member LLC is a good way to go. If you are someone whose gross income on an annual basis starts to be $125,000 or more on a regular basis, at that point, I would strongly suggest you talk to someone about forming an S corporation. An S corporation basically has the liability protections of a corporate entity or an LLC with the pass-through taxation of a partnership. And what's interesting about an S corporation instead of an LLC is, as an S corporation, you can pay yourself a salary. So there are some interesting things you can do from a strategic perspective as an S corporation that can help minimize your tax benefit and your tax obligations. Having said that, it's way more expensive to form than an LLC, and there's an additional tax return you have to file every year. So that's why we really want to make sure the benefits of having a more complex entity make sense from a cost perspective. Peter Riley is the person I always recommend if you are someone who's thinking about an S corporation. His firm is based in Boston. They do excellent work in this area. But those are kind of the three entities we typically see. Another question has come through. Can you use the EIDL loan to pay for the LLC? So the formation of your LLC, you absolutely can, because the EIDL has almost no restrictions on what you can spend the money on, as long as they're related to the operations of your business. And forming an LLC would absolutely fall in that category. So great question. I don't think I saw any more questions come through. Oh, a happy birthday message to my mom came through the chat. Thank you. I will be sure to let her know. She'll be excited. All right. If there are any more questions, go ahead and put them in the chat and we'll address them. Otherwise, with that, I will close out today's session. Thank you so much for joining and for your great questions and your perseverance in getting through all of this, this crazy summer, this crazy year, and all of the things that are going on. Take good care of yourselves, and I will look forward to seeing you on August 3rd. Thanks, everyone.